So, Gina, you were the first VC to invest in clean tech. What were your difficulties in the beginning, and at what stages you had the difficulties, if at all? Do you still have the same difficulties?
So back when we started in 2000, I would say that the sector didn't really exist. So we called ourselves a sustainability fund, which most people, particularly investors, had very little understanding of what we were going to actually do, what that meant. So we have from the beginning defined sustainability, if you like, as or sustainability investing is investing in companies where their product or service would have an improved impact on particularly environmental or resource related topics. Then in about 2002, 2003, a very good friend of mine, Nick Parker, started up Clean Tech Group, which I think that was very helpful to get people to have a certain consensus around what does this actually mean. And so kind of everybody started using this term clean tech. That was very helpful for us. So there was a certain consensus around nomenclature. But we have always been doing industrial technology, let's say within that clean tech. So you could imagine clean tech or sustainability type of investing, which goes into consumer. That's not what we do. So today we still kind of hang on to that industrial technology within clean tech sectors. So I would say that that was quite a journey. In the 2000, it was quite difficult. People didn't understand what we were talking about. And by the time 2005, 2006 came around, I think everybody got it and they understood it. And now I would say there's little confusion about what clean tech is or clean tech investing is, but unfortunately there's a lot of negative connotation around clean tech venture capital because so many venture capital funds lost money in this space. So that's why you see people stop, the people who are not using the term clean tech anymore. It's not because it's not a correct term, but it's because of the negative connotations around it from a returns perspective.
How do you survive in such circumstances when lots of VCs lost money in clean tech?
Yeah, I mean, I think we're one of the few who have survived. I mean, it helps the fact that we've been doing this for many years, but it also, I think, what is also quite important is that we work together with corporates, with large corporations. So we're not promising them outrageous returns. I mean, we are, whether it's sustainability or not sustainability or clean tech or not clean tech, the truth is we're investing in industrial technologies, and a lot of industrial technologies take a much longer time to be adopted into the market. The sales cycles are usually much longer. Sometimes the companies need larger amounts of capital, not just to finance them from an operating expenses point of view to get to cash flow break even, but also for CapEx, right? So capital expenditures. So I think that every fund needs to figure out who they are, just like every company needs to figure out who's your target market and what's your value proposition, and make sure that you've got a competitive advantage in that. So I would say, in our case, our target market is working together with large industrial corporations who are seeking the open innovation. And what we promise them is not only positive returns, but we promise them a lot of additional information and services, values, stuff, so that they can promote their open innovation. So we help them to identify companies, to whether they want to create alliances with those companies, be an early adopter of technology, in some cases even potentially looking for a company that's going to that they would like to acquire. So so if that's our value proposition to that particular target market, then we just have to make sure that we're doing that better than everybody else, right?
I see. So you consider yourself a green investor, and every VC wants and needs scalable innovation. So how open-minded are the investors towards green investments, and what are the barriers?
I would say that our investors, it's less that they're investing because of green investing goals. What it is that they're looking at their core business and they're seeing how the world is changing, right? And decarbonization is a perfect example. So they see that not as something that one should do because you want to be a better citizen, but they're saying we have to do this because we want to survive, right? And they want to secure their future as a large corporation. So if if Shell, and Shell's not an investor in our fund, but as an example, if they say, or Statoil, right, so big, very successful oil companies, if they say, well, geez, we need to diversify our business because we think that just being completely having all your eggs in one basket on the oil and gas side is not sustaining our future, then they're going to start to move, and they're going to move into renewables, and they're going to move into other things. If you look at an ABB is a perfect example. They're an investor in our fund who's doing a lot on the microgrid side. Microgrid, a lot of it is because of renewable generation. They're also interested in storage technologies, again, to make that system around integrating renewables more viable. So that's where they need to move their business. It happens to also be because of a lot of environmental reasons, a lot of environmental drivers. But when we talk to them, we don't talk to them about the environmental drivers. It's already completely accepted on their side, and it's simply good business, if you like.
I see. As far as I know, you have invested in a number of water-related projects, in water sector projects. Mm-hmm. And what was your most attractive project? And can you tell us about it?
Yeah. There's actually 3 companies that I would mention in particular, and each one of them is quite different. The first investment, just taken chronologically, we've made other water investments, but of these 3, was Inge Water Technologies in Munich, and they had developed an ultrafiltration membrane, and not only addressing the municipalities, but also addressing industrial companies. Particularly, they're very successful in China. So it was definitely along the trend of, you can't just pollute, and industrial companies must actually implement water reuse technologies. So they did extremely well. We sold the company to BASF several years ago, so that was a very successful investment for us. Another one that I would mention is Pressure Pipe Inspection Company, which we then merged with Pure Water Technologies. And Pure Technologies does the equipment to inspect water pipes. So the whole water infrastructure, the whole issue of aging infrastructure within the water sector, extremely important. Unfortunately, governments are faced with a huge expense that there's almost no realistic way for them to properly upgrade the water infrastructure. So using this type of a technology allows them to be much more specific in identifying exactly where are the most critical parts of the water infrastructure. And if you have to take, make trade-offs, if you like, as far as where you're going to invest, making sure that their dollars go towards the most critical parts of the water infrastructure as far as repairing or replacing infrastructure. So it kind of helps in the whole issue of aging infrastructure and the amount of water, contamination and water loss and all the other negative things. And not only that, but also the damage that is done when large pipes burst. And the consequences of that. So that was a very different type of investment than in going from Inge, which was water treatment technology, to Pure, which was very much infrastructure play. And the third company I would mention is Takadu, which is an Israeli company which has developed a software to monitor the water infrastructure. So the original idea back when it was founded was that this technology would allow the water utilities to identify leaks. Well, it turns out that only about a third of the anomalies that are detected are actually leaks. A lot of the other anomalies that are detected are other malfunctioning of either equipment, or it could be human error. But it's all around making the management of the water infrastructure much more efficient and dramatically reducing the leaks, obviously.
How green valuation is different from classic valuation?
Yeah, I mean, I'm taking the word valuation to mean financial valuation, right? My background is finance, so when I look at valuations, I think of financial. I don't think we do it any differently than we do any other valuation. I think there are very strong normal economic reasons to make investments in companies which are going to do better because of the environmental trends that are out there. We also, though, don't invest in companies where we think that this is really good for the world, but we don't think that the industry is going to adopt the technology, right? And that's just losing your money, right? So,
Yes.
So we don't make that trade-off. It either the environmental trends are supporting the business case, or they're not supporting the business case. But in the end of the day, it has to be a financial case.
So when you are exiting a water related project, what are the major challenges that you see in finding a buyer for such a project?
Look, in this sense, I mean, a project is an actual company that we invest in. We've never had problems finding buyers for our companies. Where there are, we think there are plenty of large companies out there that are very interested in expanding their water business. As I mentioned, we sold Inge, we sold to BSF. Pure is actually a publicly traded company now in Toronto Stock Exchange. So that one wasn't one that we had to find. But also, if I look at Takadu, for example, there are many, many companies out there, large companies, who are very interested in acquiring younger, say, startups that have developed technology to help to improve the operation side of managing water networks. So whether that be the large operators like the Veolias and Suezes of the world, or it could be people who come more traditionally from the component side, like a Donaher, or it could be people who come from the data analytics side, like IBM or Oracle, these types. So I think that there's, depending on which company it is, there's still quite a number of potential acquirers for these companies.
So how risky are water sector investments?
The big problem with the water sector investments is when the companies are focused on water utilities. And a lot of the companies that I mentioned just now are focused on water utilities. And water utilities have, unfortunately, sometimes a very, very low incentive to improve their operations. And it's not just because water is not properly priced in the market. Really talking about the utilities themselves, who often are in a monopoly situation. The managers or middle managers have no incentive to take any risk, to adopt any new technology, and so they just continue as business as usual, right? So it's a huge turnoff for a lot of venture capital funds. So a lot of funds will just categorically not invest in any company that is targeting water utilities, just because the technology adoption rate is very, very long. And the sales cycles are sometimes long as well, because a lot of times they're having to go out to public procurement process. But the public procurement process we could live with. That wouldn't be a killer in itself. It really is the lack of entrepreneurial type of attitude within the water utilities themselves. There are technologies out there that work, that they could guarantee them a return on investment, a huge cost saving stuff, but for some reason these water utility managers have no incentive to pursue such actions. So it's very different than dealing with, let's say, an industrial customer within the water sector who has to, I mentioned before, the whole water reuse in China, where they're under pressure to either save money or to improve their environmental record, if you like.
How much does your fund have under management, and what is the share of water sector?
In total, we've managed about 400 million euros, and about 15% of that goes into the water sector, which is about, if you think of the other sectors that we invest in, they're very, very large sectors like energy, industrial IT, and advanced materials. So our water deal flow ends up being about 15% of that. So we receive over 1,000 business plans a year, approximately 15% of them being water, and we invest in 3 to 4 companies per year, and only about 15% of those. So we make about very, very selective, if you'd like. But we've made some very good water deals. I think one has to be careful.